December has usually been a interesting month for the markets, not only because we have the center rally, but also because historically, when you look at the stats, when you look at the data, it's mostly it has been a bullish month, a month where markets do pretty good, averaging between 1 and 2% on the upside. But this specific month of December, it's a little bit different because we have the new Micron variant that spooked a lot of investors, creating panic on the markets, and we've seen major pullbacks, which I will call a correction, all right? Because the Dow Jones, the S&P 500, and the Nasdaq has now been around 5 to 6% correction since the levels prior to the Thanksgiving week, or a couple of days prior. So it's a good time to actually buy the dip in some of the sectors that not only are poised to recover based on the center rally, but also as Omicron fades away, as we've seen today, and more importantly, as we are kind of looking a little bit ahead on what's going to happen in 2022 when it comes to inflation and what the central bank, the Fed, is going to do. All right, so the stock I'm going to share with you are all poised to have these three main events as catalysts moving forward. So jumping into the first one, JETS. This is actually an ETF. Before jumping into the stocks, I'm going to give you just, an idea on the sectors. And if you don't really want to bet on a specific stock, all right, because you want to diversify your portfolio or diversify your buys into the specific space, then ETFs are a pretty good, way of exposing your portfolio to an entire sector. So first of all, JET is really about airlines. The airline sector was really one that was majorly impacted back in 2020. But so far, in 2021, they haven't really recovered fully to the extent where they were trading before the pandemic. You can see here that before the pandemic, that was February 2020, it was still very, very, we barely made it back to that point. We were still sitting at 35% below that point. All right. So overall, airlines have still not recovered. So for 2022 and even for starting now, it's a really good bet to make some decent gains, especially as Omicron fears are fading, because people tend to realize that, hey, maybe this thing was overdone because so far people who have been detected, as being infected are having only mild symptoms. All right. So not of a big deal, especially when it compare it to Delta. All right. So JETS, it's a pretty interesting one to buy. And within JETS, if you want to specifically look at something, I will really recommend American Airline. This is even Delta. These two, Delta first, because Delta is, one of the major carrier when it comes to long courier, meaning international travels. All right. And American Airlines really because it's one of the ones really badly, beaten down so far. And in terms of price or purchasing power, it is still the very cheapest one within the airlines industry so far. So we're talking about a 37% upside since the levels prior to the pandemic. So very interesting good deals here. Now I'm gonna add to this something that is not really airlines, but it's kind of consumer discretionary, and I'm talking about cruise lines. So cruise lines also today had a major comeback, 8% for CCL, Carnival Corporation. I think NCLH, Norwegian, had maybe a 10%. And when you look at the 5 years mark, we are way below 65% upside potential as we get into 2022. And all of this has been only thanks to COVID. All right. So as we are now entering into this new phase, people are gonna start transferring or rotating from tech to this kind of stocks. So now going back to the ETFs, the energy sector is another big one. So far it had recovered, but barely touched the level. We're still looking at a 10% below the levels prior to the pandemic. But the thing is, with energy, you have the infrastructure bill, all right? But more importantly, with inflation and Omicron Delta, kind of fading away, all of these three, according to my personal experience and opinion, what we saw in the past in the exact same time last year, this is going to be poised to, move forward because inflation, if you want to, hedge your portfolio against inflation, energy sector has usually and historically been and naturally is the way to go, because this is one of the main driver of higher inflation or in higher prices. So you want to bet here. Now, getting into energy, if you want to get into some specific stocks, well, we have a lot of those, but Apache Corporation, very interesting. In the last 6 months, we're talking for the last 5 years, we're talking about what, 20% minimum, but PT's targets for 2022 with oil prices trading higher to the 65, 70, 75, which I think it's kind of an conservative way to go here. We might look at Apache trading at 45 or 47. So this is according to where we are at now, 45% upside. Now, Petroleum is another big one. Today didn't really did as well as the others, but on this last year, if you compare prior to the pandemic, we are kind of where it was, but oil prices are way higher than they were back then. All right, so the price target here currently are around the 80s, 77. So 77 from now, we're talking about what? We're talking about a 36% upside. But this is really a $120 company based on the recent acquisition and the cash flow they're supposed to print, especially next year when they start paying off, when they continue to pay off a lot of debts. All right. So this is another big banger you want to have on your portfolio if you want to bet on oil and gas. Occidental Petroleum is another one, especially with the dividend poised to come back in 2022. On the last 5 years, we're looking about around what, if you look at the targets here, with 55 is the target, so 45% upside. And then you have Devon Energy. Devon Energy, it also has a double, dividend. So not only you have a price capital appreciation there, but you also have that double dividend. So here you can see, based on, because these didn't have as much debt as the others, all right, financially it was stronger to sustain through the whole pandemic. That's why the price already flush. But the targets here are, really around this here. We're talking about, 48. So 48 and 42, we're talking about what? Still a 13% upside. But hey, with that dividend, the variable and the fixed, this is really passive income you want to build if you want to own this company. Now, going back to another ETF or another sector that is poised to move higher this month, and we get into 2022, is the financial sector. Just because if interest rates, not really if, when interest rates starts increasing, hey, these guys, not only the banks, but the financial companies as a whole will start also making a lot more margins, which is good for the profits and the free cash flow to be made for the shareholders. So, XLF, if you look at the 5 years, it really ran higher, right, because of the reserves, but inflation has not really been caught up in this yet. All right, it might be a little bit priced in, but we're still looking at some major, a defensive plays against inflation. And then if you want to get into some specific stocks, maybe look at the banks like Bank of America, but you also want to get the investment banks like Goldman Sachs, Morgan Stanley, or the payment guys like Square, which from the last highs of this recent month, we're talking about the 32% upside gain, or MasterCard, where, also on the recent highs, we're talking about what, 15% gains. But you can see that, on the last, based on where the pandemic started, they're really, run a little bit higher. So to finish this, I'm going to finish with the retail sector. Retail sector, just because people will still continue to buy stuff. The savings on the American, consumers has been the highest in history back in 2020 because of that stimulus money, but also because we were locked down and nobody was really traveling. Nobody was really, doing anything except maybe buying stuff for the house. But as that goes away, because you can only buy that amount of stuff, that much stuff for your house, like computers, or home improvement stuff. So I bet that the retail sector is going to continue to also poised. And if you want to bank on some of these, look at Dick's Sporting Goods. This is one of the most undervalued stock in the retail sector in the whole market out there, just because when you look at the earnings that they posted 3 weeks ago, this is amazing. They were, the the earnings were incredible. There are secure partnerships with companies like Nike. They have an amazing supply chain when it comes to online experience and everything else. So this is really going to be another banger, but the price target here is really $170 a share. So we are trading even higher, lower to what it was prior to the earnings season. All right. So this is kind of what a remix of what we saw this same time last year. So another way to buy a great dip here and let it ride to the new highs around 150 or maybe 170 as the price target around the streets is really looking like. So keep in mind that it doesn't have to happen just the way I'm explaining here, because this is just what the market is telling us or what the conditions are currently today as I'm recording this video. Also, the small caps here that I share with you in the oil and gas energy are very volatile. So you want to keep an eye on that. And as always, when I'm buying stocks, I'm not going full in on the first day, especially as we are rebounding and this market is a little bit nervous. All right. So get in, but not with all your capital and maybe 50-60% of it. And then if it dips a little further, like, thick spreading goods have been slipping really in this last month, then you can add to bring your share price average cost even further down. All right. So that's going to be it for this video, guys. Let me know what you think in the comment section and I will see you in the next one.